Everyone I know is worried about making more money. As much as you should be focused on learning new skills, becoming more valuable in the marketplace so that you can grow your income, I'm here to tell you, you should be hyper-focused on how are you multiplying the money you're already making. What I mean by that is you are most likely getting paid in some way, shape, or form. We all need to make money. I work a job in software sales. I'm 25. I get paid twice a month, and I invest all of my money in the stock market so that I can create more leverage, so that I can make money while I sleep, and so that I can reach my financial goals sooner rather than later, so that I can have more flexibility and freedom later in life. The reason you want to watch until the end of this video is I'm revealing my entire $165,000 portfolio stock by stock. I'm not a fiduciary, and just by watching my video, I can't guarantee you're gonna make money. I'm not Ray Dalio after all. I don't have 160 billion in assets, but I am 25. I do have 165,000 of investable assets. I did make over $20,000 in capital gains last year at age 24 because I identified Zoom video before it popped off. And I'm confident in a couple of the companies within my portfolio that I'm sharing today that I believe have similar upside to rapidly grow and accelerate your money very fast. Make sure to hit the like button below and subscribe to the channel if you haven't already. This is day 163 in a row putting out a new video on this channel. It's Friday night for me here right now. I just ate a large pizza. I want to watch the NBA playoffs. And as much as I didn't want to make a video tonight, I said, I need to deliver a video each and every day. I need to be consistent, and I want to help you in some way to get your money right. So let's go ahead and jump in right now. I'm going to walk through each holding and talk about why I believe in it, and you can decide for yourself if it's worth investing your money in that company. What you're seeing on the screen is all of the equities, the actual companies that I purchased stock in, and then the bottom section is the ETFs. So think of those as index funds. The first company I believe in is Palantir. Cost basis means the amount of money I've actually invested in the company, and you can see that I've invested $12,700 in Palantir. So far, I've received gains of $5,500. At one point, the gains was $18,000 because the stock climbed all the way up to $45. I purchased around 11 as soon as the company IPO'd. And the reason I believe in the company is the founder is still the CEO. And Palantir sells a market to very large enterprises and government contacts. In order for the stock to really break out, they need to penetrate the corporate space. They've partnered with IBM to do so, and I believe in the future of the company. I really don't even know what they sell. All I look for is the founder CEO to still be in place, a company that's doing really cool things with technology, and a company that has a lot of run rate to grow. And I believe that they will still be very relevant in 3 to 5 years. So I believe in Palantir, and I will not be selling my stock anytime soon. The next company on the list is Amazon. You've most likely heard of Amazon. They sell things online. Maybe you haven't heard of Amazon. I purchased stock around, I think, 1,600. It's trading at 3,200. I own 4 shares. This is just a slam dunk. I heard Andy Jassy, the new CEO, speak. He actually founded AWS. And AWS, think about this. They do $45 billion in revenue, and you probably don't even know what AWS does. Amazon is a juggernaut. Amazon is unstoppable, and it's just a company you want to be in. Even though it seems expensive now, it's going to be expensive in 2 to 3 years from now. So it's worthwhile to get in, hold, and see what it does because Amazon's a sure thing. The next company is Salesforce CRM. They are the holy grail. I spend hours a day in Salesforce, and that's the reason why I invested. Most of you know who Salesforce is. They recently joined the Dow, I believe, last year, because they're a massive enterprise. They acquired Slack, they have Salesforce Ventures, and they have Mark Benioff. He founded the company. They're a juggernaut. They're unstoppable. They have the best product market fit. They have a monopoly in the CRM market. They're not going away anytime soon. So it's a stock that is in tech that's more stable than most of the tech that is relying on future earnings. So it's a company that I believe in. I know people that work for them. They've got great leadership. They've got great locations all across the country. They're a global workforce, and they're a juggernaut and a powerhouse. So I'm not selling Salesforce. I'm holding long-term. The next company you see is ZoomInfo. I think ZoomInfo, this is a prime time to get in. I use ZoomInfo in my job, and the reason why I believe in it is because we had a ZoomInfo license in my first year in my software sales job. And me and 10 people had to split the computer. ZoomInfo, you look up, I could type in your name and find your direct email, your direct phone number, and find you. It is mission critical for businesses so that they can find people's numbers and contact information to sell the product and service. As soon as we bought an enterprise ZoomInfo license and we all got our own license, it increased my productivity and my team's productivity significantly. That is real business impact, and I know that businesses really care about that. It's trading at 43. I put $10,000 into it. I believe in it. I've seen it rocket up before, and the founder is still the CEO in place. They're hiring like crazy. That is a good one to look at. The next company is IPOE. This was a SPAC led by Chamath Palihapitiya and his firm, Social Capital. They essentially acquired / took SoFi public. SoFi is a money lending platform. They do a lot. They've invested significantly on the digital experience. The founder is no longer the CEO, which I don't necessarily like, but the CEO, his name's Anthony Noto. I've researched the guy. He's a slam dunk. He is absolute money. The Rams Stadium in LA is SoFi Stadium. They're investing for the long run, and as soon as that ticker changes from IPOE to SoFi, I think it's going to shoot up, and this is a long-term bet. They're getting their bank charter license, and I just believe in what they're doing from an innovation standpoint, and it's really cheap. It's trading at $20, not 20, yeah, it's trading at $20 a share, and I own 600 shares. So think about it. It goes up $1, that's $600 right there. I invested $12,000 in it. I had $14,000, and I did liquidate some shares yesterday because it shot up, just because I wanted to get additional capital, because I want to try and build that cash reserve. The next stock is Apple. I'm not going to go too deep into Apple. We use their phones, we use their computers. That's what the software I'm using to edit it. You know who Apple is. And here's a crazy thing to think about. The AirPod's single line of business, I think did like 20 billion in revenue. And when you look at that and compare it to other companies, it's actually much larger than many other prominent companies' revenues that you know. So I only have $2,600 invested in Apple. And to be honest, I'm looking to get out of it. I believe in Apple. They built $1 billion campus. They're unstoppable. But the common trend you're going to see is that I'm not putting 1,000 or 2 in companies. I'm putting at least $10,000 in a company I believe in, because that is truly the way to make money. When I first started investing multiple years ago, I would put 1,000 to 2,000 in and say, oh, I don't want to put more, I'm scared. Now I'm not trying to time the market. I'll put 5,000 in a company and I'll slowly build my position up, buying more shares every time I get paid. It's a slow process. And what that is called is dollar cost indexing. So pretty much you're periodically buying into stocks over the course of months so that you're getting it high, you're getting it low. I'm trying to get out of Apple because I only have a $2,000 position. My next lowest position, which I am in the process of building, and if there's one stock you come away from today's call saying, you know what, I'm gonna look into that stock, it's Coinbase. I have $6,500 invested in Coinbase. Of course, I am down a little bit. It's trading at 236. It IPO'd around it's a little tricky. It was like mid 300s to early 400s. I actually made a video on why you need to purchase Coinbase stock. I personally don't own cryptocurrency. I don't necessarily believe in Bitcoin, Ethereum. I'm not in all of that. What I do believe in is that if you're not invested in Coinbase, Coinbase is the best hedge against decentralization and any one particular cryptocurrency, because it's essentially an index of all the cryptocurrencies because it owns the infrastructure. The company is only 10 years old, and I really think there's a lot of growth because they're investing significantly in that crypto ecosystem. I don't know a ton about the space. Couldn't tell you any cryptos to buy. All I can say is that Coinbase, in my opinion, is really undervalued right now. And it's a company that I'm buying in slowly but surely, and I'm building my position. I will absolutely put another $5,000 into it. The last company you can see is Qualtrics. I've invested $41,600 of my own money in it. I'm down $7,100 right now. I'm not going to comment on Qualtrics because I am an employee for the company, but what I can say is I believe in the mission, I believe in the vision. When we look at the ETFs, this is the first one that I would definitely buy into. It's BETZ, B-E-T-Z. This is an index for sports gambling, particularly in the digital space. So when we think about FanDuel, when we think about Barstool and all of those different apps, I don't sports bet anymore, I'm retired, but I do believe in the industry. I bought in early. As soon as this ETF became public in the early 20s, it's now trading at 31. I'm up 5,800 in it, and I really think that this is a slam dunk. So I would definitely look at that one. The next two ETFs are VTI and VOO. These are just Vanguard index funds. One is for the S&P, one is for the total stock market index. These are just sure things. If the market goes up, if you want to bet on America, these are the best indexes to get into. And finally, ARK Innovation. And this is just a fintech innovation fund. I believe in Stripe. I believe in Square. I like PayPal. Digital payments are the future. Clearly, when you get on your phone, you want to be able to pay for things. That's just the way we're moving forward as a society. So I don't even know what to invest in. I'm down a little bit in it. I've seen it rocket up before, and it's just what I'm going to hold on to for a long time, because fintech is absolutely the future. That is my portfolio. Let me know what questions, thoughts you have below. I'm by no means an advisor. I'm not a fiduciary. I can't guarantee you're going to make money. You could very well lose money, and I very well may lose all my money as well. But I want to be open and transparent about where I'm putting my money, what companies I believe in, and where I'm betting my money in, because my financial future rides on the performance of these companies. And you can never time the market, so I'm not going to tell you how you should invest. All I can share is what I'm doing, and you can be the judge of what you want to do with your own money.